Welcome back and thanks for joining us. You're watching Traders Corner and with me as always is Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome back.
Hi Julieta.
Garth, this is one of our pre-recorded shows and we occasionally have these educational programs when you waft off to exotic places. So the show this evening is going to discuss something called seasonality. So maybe we start off with what that is actually about.
Yeah, seasonality basically looks back at patterns in the market that are repeatable over years. And you develop sort of a seasonal history of, you know, what times of the year are the market strong, what times of the year is the market weak, and that sort of thing. And really, we've done some fairly good, solid research into this. When I say we, my colleague Andrew Todd, who works with me on Traders Corner, he's done most of the work.
Away furtively in the background.
Yeah, he's been number crunching like crazy, and I'm just here to present his work this evening. But it's very, very interesting. So what I want to look at, first of all, we're going to look at various different aspects of seasonality. But this first chart that I've got here is a chart of the top 40 index on the JSE. And it shows you what the average performance has been per month for each of the last 16 years on the JSE. Okay. We only go back 16 years for a couple of reasons. We feel that that is the time that the market's been the most liquid since we went on to electronic screen trading. It's also when derivatives activity has been more evident, and it's since our markets were opened up to the rest of the world since the end of apartheid and what have you. So that's why we've kind of focused in on this time as opposed to going back much further than this. So here's a chart of the top 40 at the moment, and what's very interesting to note is that you can see pretty much every month of the year is on average a positive month, with the exception of June. June historically is a very weak month in the market on the JSE, and you can see that by and large June averages a loss of around about 1% for the month on average over the last 16 years. The rest of the months have been quite strong, but also interesting to note that period where we go into the Northern Hemisphere summer, so the months of June, July, August and September, are very, very choppy months with very muted performance. And I've always found those difficult months of the year to trade myself because the market's choppy, it's a bit trendless, a bit directionless. And you know, there's that old cliched saying, sell in May and go away. But this is statistical evidence that actually it works. By and large, after May, you might as well sell up and wait, until the fourth quarter of the year to then come back. And what you can see is if you look at the months of October, November and December, those are historically very strong months of the year.
And you come back with a vengeance, it sounds. I mean, because October and December look as if, they are the two strongest months of the year.
That's right. And if you factor January into that, I suppose, you could take it over, October, November, December, January. Those are really strong months of the year to be in the market. And you'll find that the bulk of your performance actually is probably made in those 4 to 5 months of the year each year.
And just without getting too technical, it's interesting that you've gone back to 1996 because certainly in the last 3 years we have experienced this, but it's been with each new round of 4 years, I suppose, stimulus and liquidity announced by, in particular, the US Federal Reserve. So, so I can see how that might skew the picture somewhat. But going back as far as you have, presumably that effect would have been muted. So this is, by and large, what happens.
It is, yeah. And you'll see later in the show, I've got some slides of the Dow Jones Industrial Index as well, which also shows that last quarter of the year is typically a very strong quarter for the market.
Okay. What about the rand dollar? Because that's another key indicator for us.
It is definitely key, and it's certainly going to talk to some of the slides that we've got coming up now. So this is a chart of the rand dollar, also going back to 1998 this time. So we're looking at about 15 years worth of history here.
I suppose that's once the Fin Rand kind of,
it was, again, it's the data that we dug up is that old. So if you look here, below the line is implying that you have rand strength during those months, and above the line implies rand weakness. Now what's very interesting is notice January is always a very weak month, and we've noticed this theme, and we discussed it in the show right at the beginning of this year when we came into this year with a short rand position.
In fact, that was the trade that sort of kicked us off.
That's right, it was, and it was based on the fact that we had noticed this seasonal pattern of rand weakness every year in January. But now have a look. April actually typically is quite a strong month for the rand, so you can expect some rand strength. But then in May, it's almost as weak as January again. So that's something interesting to take note of, particularly now where we're at in the second quarter. And I want to look at that now in the context of the chart of the rand dollar exchange rate, because I think this is something we must definitely keep our eye on in the weeks ahead for a potential trade. If you have a look at the chart of this rand dollar here, we've got a very steady weakening trend in the rand over there. And what you can see over here is that we had this big area of overhead resistance for the rand at about 10 Rand 40. And what we'll certainly be looking out for in the weeks ahead, given that what I just showed you about that seasonal chart of the rand dollar, given that the rand is typically quite strong in April and then that it weakens sharply in May from a seasonal perspective, what we'll then look for now in April is we'll look for any significant strength in the rand towards about 10 Rand 40, maybe even 10 Rand 20, that sort of area. And we might look at that as a possible area to then initiate a rand short, because that'll also be technically significant if the rand comes back to that sort of area. You can see the technical significance of that area where we would then expect the rand's trend of weakness to continue again. So definitely a trade that we're possibly looking to enact in the next couple of weeks.
And certainly I was talking about it with Rudy van der Merwe last night, wondering whether we are going to go stronger from the 1050 odd level, well, so 1055, 1052 that we're sort of hovering at the moment. Yeah. So I hope we do, because then one can maybe take some money off tour.
Yes.
Garth, what about the JSE sectors? So if we start off, for example, with the resources sector.
Yeah, well, a couple of interesting points to note about resources here. Notice for this time of the year, notice that May is actually seasonally quite a strong month for the resource shares, and that kind of goes hand in hand with the fact that we've got a seasonally weak rand in May. So that would make sense. But then also notice June and July are quite weak months for the resources sector. So I suppose what I'm saying is, possibly we could expect some sort of strength from the resource sector in May if this whole theme and this typical seasonal pattern plays out.
And I presume that June and July, I mean, if you go back to the overall chart where June is quite a negative month and they're quite sluggish months, I guess the resources index, we've got the big diversified and dual listed stocks. So, the stocks traded by and large international players.
Well, that's it. Those two factors tie together, overall market weakness and weakness in the resource sector in June, as we can see here.
And what about the industrial index?
The industrial index, no clear pattern here really, but what is interesting to note is that April is quite a strong month for the industrial index. And I guess that also goes hand in hand with the fact that we've got a seasonally stronger rand during April. So that also plays into the hands of the domestic sectors. And then again, notice that June is quite a weak month. And then October, November, December, very, very strong months for the industrial sector of the market.
And is it a similar picture for the financials?
So yeah, pretty similar for financials really. Again, April, quite a strong month seasonally. May and June, not so strong. And then the final quarter of the year, October, November, December, very strong months for the financial sector.
Although it's also interesting to see that maybe the gains are somewhat more muted than, for example, on the industrial or the resources index when they do occur.
Yeah, notable, I suppose. But again,
not sure what to read into.
Not
that,
really
right?
how to read into that. No.
And then if we actually look at them relative to one another, how does that stand?
Yeah, the only relative that I've shown here is the resources versus the industrial sector. And just to show you that, you can see here that below the line shows you underperformance of the resources sector, and above the line shows you outperformance by resources. And what this is really telling you is that we've got underperformance by the industrial sector by the resources sector rather, in April, followed by quite strong outperformance by resources during May. So I suppose if you were wanting to consider doing one of those complicated pairs trades like I did some time back, then maybe you would try and tie it in with this seasonality to try and sort of finesse an entry, I guess.
Garth, before we get to the overseas markets, I mean, do you have this in the back of your mind? Do you have a chart around the room showing your sort of seasonal patterns? And is it something that you kind of imbue yourself? And having been in the business for a long time, it comes quite naturally.
Well, look, since we've done this research, I'm probably going to pay a lot more attention to it now, because I find that there's some very interesting patterns here that we hadn't really picked up on before. There were certain patterns that I knew before just from experience in the market. I knew that the final quarter of the year is typically very strong. Yeah. I also knew that the rand is typically quite weak during January. And that's just stuff that I'd observed through the years and years of being a trader. But actually having gone and done the numbers and crunched the numbers to come up with this data has really been a very, very interesting exercise. And I think that this is the type of stuff I would probably put on my wall and just have there as a reminder to know sort of what times of the years are weak and strong for different areas of the market.
Mind you also have to trade what you see, so
True.
Don't make it absolute.
Yeah.
Okay, so is it quite a similar picture for the US market and particularly the Dow Jones?
It is. What's quite interesting here, now this is not research we've done, this is now research that's done by a US firm, and you can see the name of their firm on the chart there. Interesting to note, though, that the first couple of months of the year are fairly firm historically for the US market. And then you have this situation from May all the way out until the end of September, where, again, it's that sell in May, go away phenomenon. The market is very, very lethargic and trendless and directionless in the months between May and the end of September. And then you have this massive rally in the market typically at the end of the year in the months of October, November and December. And bear in mind, this data is a lot more historical data in this chart than what I had for the South African charts that I'd shown you recently.
So generally, September is probably when, if you've gone into a bit of a seasonal coma, you might want to snap out of it and start having a look for stocks to buy.
Absolutely. I mean, if you did sell in May and go away, then you often want to come back in sort of August, September, that sort of time, for a year-end rally. That has historically been quite a good strategy to employ.
I must say, I find this quite fascinating because there are always so many aspersions cast on South Africa's December, January holiday period, and all these biddies talking about how unproductive we are, and et cetera, and how the entire country shuts down. Well, I mean, that's a 3-month period there we're talking about.
Which is very, very strong. Yeah, absolutely.
And Garth, the other interesting thing to observe is what happens, I suppose, in election and between election years.
Yeah, and not South African elections here. We're talking now, this is a US election cycle chart. So this is now a chart of the Dow Jones Industrial Index looking at the midterm election year, which is what we are now. This year is a mid-year or midterm election year in the US. And this is the historical performance of the market in a midterm election year from 1898 all right, to 2010. So we're talking about over 100 years worth of historical data here. So it gives you a fairly good average. Notice markets in these years, it peaks typically in April, and then you see a trough during June, which would talk to that seasonal weakness that we spoke about in June in our market earlier. And then again, you have a bit of a rally into August and a trough again in September, and followed then by this very, very strong period into the end of the year, October, November, December. So, this is just interesting stuff, I think, to keep in the back of your mind for the rest of the year. And particularly as we go into the second quarter, there are some fairly notable seasonal patterns that are evident in the months of April, May and June that we can keep an eye on in our market now.
And Garth, I mean, most of this research is focused on, what the markets have actually done. Did you have a look at liquidity per se? And going into the second quarter, I mean, in your experience, have you found that liquidity has either increased or dried up? Because it's hard to actually gauge where we are at the moment. So as far as there hasn't been that much volatility, put it that way. So, did any of the research take that into account?
No, not really. Look, I don't think the second quarter has a massive amount of difference in terms of liquidity, but I do think that those months for May, June, July, August, when you have the Northern Hemisphere summer, it's not uncommon to see slightly less liquidity in those months by virtue of the fact that that's the Northern Hemisphere summer, and there does tend to just be a little bit less activity in the markets during those months than on the other months outside of that period.
Okay. And just getting away from this, we've got about a minute left. Garth, have you found it quite tough for other guys out there? Because the portfolio actually has done fantastically well this year. It's probably the best start to the year that we've ever had.
Yeah.
But certainly people I've spoken to have found it quite hard to find a direction in the markets. What are you thinking at the moment?
I agree with that. It has been quite a choppy sideways market so far this year. But we did allude to that right at the beginning of the year on this show, and we said that we expect 2014 to be a lot like 2011, where the market just tracks along sideways for a lengthy period of time. And you're going to need to be very, very specific on your entries and trades that you select in this time. And I think by and large we have done that quite well. We've been pretty selective on the trades that we've taken. We haven't traded every week. And we've obviously really adhered to our stop losses very, very strictly, which has helped us as well.
Yeah, all right. Well, we'll leave it there, and we'll be back with our normal programming next week. Garth, thanks very much.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.